Welcome to the Alan Berry Reports TV show. I'm the editor of the Alan Berry Reports and the host of this show. This is our second in a series of programs that we're going to be doing. And in our first show, we did a welcome and basically talked about why we follow what we do. And you can find that for replay on our YouTube channel or on our website. Today's show is going to be about our Outlook 2010 report. Recently, we put out our 27th edition of our report, which is, we've been putting them out for 5 years now. And the first edition of each year, we do a outlook for the year ahead. We've been doing this for a couple of years now. And in the Outlook 2009, we talked about various different assets that we talk about a lot in our print report and our blogs. And last year we also had an online radio show that we talked about these various different assets a lot about. And so I'm just going to give you a brief outline of what we talked about. We did our speculation on where we thought the trends as well as the prices of various different things would go. And we start out with stock markets. We talked about the Dow Jones Industrial Average, the S&P 500, the Toronto Stock Exchange, and the Toronto Stock Exchange Venture Market. Then we went on to commodities, and we talked about gold, oil, and copper. We also talked about bonds and currencies, the US dollar. And, you know, I'm not really that much into bragging about how well we do on certain things, and basically I'm of the belief that if you're good at something, everybody else is going to talk about how good you are. But I'm also aware enough to know that in today's media world, you do have to toot your own horn every once in a while. And instead of getting too much into the tooting of my own horn, basically in the reports, we on all of those assets that we talked about, not only did we get the trend right, but in some of them we also got the price right of what we were talking about. And so instead of getting too hyperbole about these results, what we would do instead is challenge you to go out and find anybody that you're aware of. I follow a lot of commentators that do this kind of work, and I don't know of anybody that was as accurate as we were in the reports. So my challenge is to go out there, and if you can find anybody, let me know. You can contact us through our website. I'd love to hear about it because I'd follow their work as well. So this year, to repeat what we did last year as far as the accuracy on all the various different calls is definitely going to be challenging, and we even made it more challenging this year by adding a few different things. So I'm just going to go over some of the things we talked about. We started out the report, the Outlook 2010, by talking about stock markets. And the stock markets we talked about were the Dow Jones Industrial Average, the S&P 500, the Toronto Stock Exchange, and the TSX Venture Market. And we talk about these because they have, for the S&P 500 and the Dow Jones Industrial Average, what happens in those markets can affect stocks throughout the world. So you always have to keep an eye on what they're doing. The Toronto Stock Exchange has a lot of the Canadian largest mining companies and oil producers, and so it's a really good market to follow as far as what's happening with the production of commodities. And then the TSX Venture Market is, it has a lot of the smaller high growth exploration and new mine developers, and this is really important to watch to sort of see what's happening with the pipeline that will look after future production. And so that's in a nutshell why we watch those. You can go on and find our report, and in the report you'll see more of the reasons. But basically what we're looking for in the Dow Jones Industrial Average is we're looking for kind of a sideways market. And what I mean by a sideways market is this. When you look at stock charts, you're going to notice that sometimes they'll kind of go like this, the chart pattern, and then you'll have this kind of movement. And so here's your stock chart, and if you draw a line along the bottom and a line along the top here, you're going to see that the pattern was kind of in a sideways action. And that's what we're looking for as far as the Dow Jones Industrial Average and the S&P 500. Then we also talked about the Toronto Stock Exchange and the TSX Venture Market. And because we're bullish on several of the commodities that the companies in these markets either produce or explore for or try to develop new mines, we have a bullish outlook on commodities. So what we're looking for in those markets is something a little bit different. What we're looking for there is, you see trends like this where you kind of get rallies and then they'll come back a little bit, but they don't come back as far. Then they kind of rally again, and this kind of a trend is a much more bullish trend. And that's the kind of action we're expecting to see with the Toronto Stock Exchange and the venture market. Now, of course, you're going to see that you'll have pullbacks, and just because you have pullbacks, it doesn't mean that the trend's over. It just means that there's some selling pressure inside the much bigger annual trend. And so that's what we're looking for as far as the markets go. After we talked about the markets in the report, then we moved into commodities, and we talked about gold, silver, copper, oil, and uranium. And we also included in there a little description of why we think these things are so important. But in a general sense, as far as the gold, silver, copper, and uranium goes, we're looking for a kind of similar kind of trading pattern for those commodities as what we expect to see for the stock markets. After we dealt with the commodities, we then moved into bonds, interest rates, and the US dollar. Now, the US dollar has a really big impact on what happens with commodities because they're priced and traded using that dollar. So if the dollar is under pressure, the commodity prices are generally moving up. And we have had a bearish outlook for the dollar for some time, and the basic reasons are with record deficits and debt growth and all the costs of the stimulus plans and whatnot like that. We think that the reasons that the pressure has been on for a long period of time on the US dollar hasn't changed, and it's going to continue to get weaker. And so taking that into consideration, this is another reason why we don't just think that commodities move because of what happens with the dollar. The key reasons have to do with supply and demand. And we talk about that in the reports, and in that particular, the Outlook 2010. So again, you can find that in there. Interest rates, basically, we don't think the Federal Reserve is going to be able to move on interest rates this year. We think the main reason is that they're going to be too afraid of affecting any nascent recovery in the economy. And so we think that they're going to stand pretty solid and not move on interest rates this year. So those were all the assets that we talked about in the Outlook 2010. Then in the closing of the report, our basic belief is that commodities are well positioned based on supply and demand to continue long-term bullish trends that have gone on for several years now. And we follow the resource companies very closely because if commodities are in a bull market, these resource companies will have the potential to outperform, especially if you can find high quality resource companies. And so what we included in the Outlook 2010 is a listing of our favorite treasure hunters. And these are the companies that are in the various different commodities we're bullish on. And so you can find that in the report. Now, what we're doing is our web guy is going to be adding the report to our website, so you can download that and print it off or save it if you'd like. And I'm also going to be putting it on our blog. And on the blog, you'll just look for Outlook 2010, and then you can see all these things that we talked about and verify or research. And the nice thing about what we're doing with the blog is each company in our roster of favorite treasure hunters has links to their website. So that's our show for today. I really appreciate you taking the time to watch the show, and I invite you to come back and watch our future shows, and thank you very much for joining us. Have a great day.